back in live again, second live today. I touched some grass, don't worry. For this live stream, I'm going to watch some few lectures first, and then we're going to do a market review, and then I'm going to backtest mainly later, and then I'm going to create some slideshows, and that's what we're going to do. I guess we'll see how long we'll do this, and tomorrow, same thing.
Drop down to a daily chart. All right, so you see that we have our weekly volume imbalance here, and we dropped into this fair value gap. Okay, so if we annotate that, we're inside that range there. Okay, which is also a breaker. We have low, high, lower low, breaker. Extend that through. I'm not going to do that. You do that on your own chart. Okay, I want to try.
These are like some. These are on Twitter. I found them. They're like his charter stuff, and I'm sorry if you're watching this, Michael, somehow, but I'm just using information that was brought to me by Twitter. So.
Try to keep the annotations breaker, extend that through breaker. We have low. We're inside that range there. Okay, which is also a breaker. We have low, high, lower low, breaker. Extend that through. I'm not going to do that. You do that on your own chart. Okay, I want to try to keep the annotations very, very limited because I could easily light this whole thing up with a whole lot of stuff and quickly lose you. So let's drop into a 60-minute chart. Okay, so you can see how we had the market drop down into that daily, that blue shaded area, the daily fair value gap, anchored here. And then we have these consecutive down close candles, which is a bullish order block. We have a change in state delivery there. We rally up, price comes back down into the order block here and taps one more time here on the opening price, which is also the high of that daily fair value gap. Looking at what we have for the week, because of all the uncertainty, all the potential volatility that could be seen by way of all of the price delivery around those times that the market's being manipulated by CPI, FOMC, high impact, medium impact news drivers, all those factors make this week very challenging. So I wanted to go in, focus, look for something early in the week because it's going to be problematic, where there's going to be a lot of volatility and I may not be on the right side of the marketplace. So my thought process this morning was I went in thinking that I could get something early on and I'll map out what it is I thought I saw and the justifications for all those things. So here's a 15-minute time frame. You can see how we worked on that level again here. And we'll drop into a 5-minute chart. And I'm going to scrunch this up here. And right here, you see that fair value gap? That's not in the recording, but that's why I was trusting the basis of being short and going short. We had a lot of buy side in here. This high, this high, this high, this high. So all in here was buy side. We saw that run up at the open. So at 9:30, we had a big bullish candle trade up into a premium array, which is a fair value gap here.
At market open.
And then because the fireworks, I think, are going to occur later in the week around the more impactful news drivers. And Monday, today is rather lackluster in terms of the news. There's really nothing to talk about, really. There's no medium impact or high impact news drivers. So I suspected that we would probably try to create some measure of a run on sell side to wipe the board for anyone that's long, and that would be in the form of taking out the 925 low, the 7 o'clock low, and the London low, trading back down into that daily fair value gap.
That's good, Michael.
Ripping down into that there. We're going to drop into a one-minute chart. So you can see how we tore up into that at 9:30. We traded lower and working against that low of that weekly volume imbalance, that white shaded area. Okay, so we went to a premium, we broke lower, came back up into the low of that weekly volume imbalance, which is the white shaded box here. Okay, and I'm going to scrunch it up so you can see it. All of that range up there. Okay, so we dug into it here, treating it as resistance now. We have a balanced price range in here, so I'll annotate that now so we can see. So this is a balanced price range, and I'll make that a little bit darker so it stands out. And it's at an area where we would expect to see it sell off. What's resting below here and below here? Sell side. Okay, and we'll get to that in a minute. But I want to show you, using the regular trading hours, this is where that box came from that was like orange. I was showing the closing price on Friday to the opening price at 9:30. Remember, this is one of the gaps that I utilize in my analysis. So when you see my chart when I was executing, you see this. Okay, so it's regular trading hours, and I'm looking at the settlement price at the closing bell. You know, when you watch it on CNBC at 4:15, it's done. They show a 4 o'clock closing bell, but usually it's like a 15-minute rollover. Obviously, it continuously trades till 5 o'clock, but this time window is important. If you extend it through, you'll see the sensitivity here and here. Okay. So now with that information, we can drop back down into electronic trading hours.
See, because that, what he's talking about is pretty much the new day opening gap that I have on my chart with the indicator. Which, like, I'm kind of... So new day opening gaps in the new day opening gap high is the same as the opening range gap.
Now with that information,
low,
we can drop back down into electronic trading hours.
Turn
That's
on
on our chart.
captions.
Now we can see it.
I'm honestly not sure if I...
The way it looked like that before, let me
I'm
go back
pretty
to
sure I should have them
hours.
on. Usually within my channel.
I always like to do the extend right when I'm doing like opening range gaps or the variance of the opening range gap, which I've mentioned in lectures. There'll be more detail with it. So I understand some of you are impatient and you're just like, can you do this? Can you talk this? I have an itinerary that I'm following. So please don't try to deviate from what I intend to teach and how I want to teach it. It requires patience, I know, and it could be frustrating for some of you, but you know, I have to be on my own schedule. I can't be taken off my own schedule with everybody else's your way mentorship. So we have all this run up here, which is a Judas swing, going into electronic trading hours, and now we can see everything's extended. And as the market trades today and into tomorrow, those time windows is important. I like the gap that I just showed you. I like that over the course of 3 days. After 3 days, I lose a little bit of interest in it, but it can be projected into 3 days forward. Okay, so power 3, all those things coming together with more detail. So the new week opening gap, we're going to go and scrub back into Sunday's opening price. Okay, so that's down here. That's Sunday, 6 p.m. So I'm highlighting that here. I'm going to change the color to black. It's exactly what I do every single time. There is no indicator doing this for me. If you need an indicator to do this, you're freaking lazy. Okay?
Bro, call me lazy.
It doesn't take that long to do this. Plus, it's allowing you to double check yourself. And high touch is better than high tech in regards to doing this. Because if you have something wrong with your data, you know, the indicator's going to plot on incorrect data. This way you can visually see, are you really checking the right thing? And you can argue and say, well, you know, indicator won't mess up. That's your thought process on it. That's not mine. I don't agree with it. So current new week opening gap low. Text alignment is middle and on the right. And then no boldness. And set to 10.
Hey, my new
week
opening.
And once you have that, you lay your cursor on it until it highlights. Hold down Control and drag it away. And copy it. And drag it up to the closing price on Friday.
I swear,
the last tick
thing never shows up.
And then by doing that, you just double tap that. Change that to high. Right? And then you can see the reference points there. I do keep this bold on the boldest thickness, so that's why my chart doesn't look like it normally does until I do this. Okay, so now we have our current new week opening gap high, current new week opening, no, tongue twister, current new week opening gap low, and then the consequent encroachment is the midpoint, so we'll add that now. So 41.98 and a quarter is the high. Drag that down to 89 even. 89 even. Double tap, drop that in here for the consequent encroachment midpoint. So 41.93.75. So there's the business there. And we'll just drop a
I think new week opening gap is the sauce, and new day
One
opening
right
gap.
there.
Previous ones, it does not matter how long ago it was.
And the thickness. This is what you're used to seeing. And that's consequent encroachment of new week opening gap. So now we can take that fib off. It's done its job. So I mentioned in the trade while I was doing it, this candle had me concerned because this area here could be just like this, which is a balanced price range. So, and it became just that balanced price range. Okay, so in this area here, that's why this gap did not fill. I was taking the chance to see if it would offer it to me, and for the student that was saying, I thought we're only supposed to take fair value gaps after 10 o'clock. No, you can take a fair value gap that forms at 10 o'clock. Okay, I mean, this gap was there. So I'm going to take this off the extend right for a moment. Okay, so inside this area is a balanced price range. So it was likely to leave a portion of this open, but in the event that I was reading it wrong, I had to limit order in here. If it's that up in here, it would get me short and attack the new week opening gap high and then consequent encroachment of the new week opening gap for this current week. So because of all this, I'm going to take this now off. I mentioned what it was in terms of the balanced price range. This looked like this in the video and recording me executing, and I had limit orders there, and then it broke lower and went down just below that low here. So the sell side below that was just shallow when it hit this right here, one tick below it. And then I used this fair value gap there, and I used the limit order just above that high, which is 4206.25. That candle was my fill, so it went into this area here, and I showed how I moved my focus here, so that way the folks that would be following on that trade, they could see the logic. And why I felt that we would see the consequent encroachment, we're going to have to go back out to a 15-minute chart, add some lipstick because you won't see it here. So inside the upper range of that daily fair value gap, that's this blue shaded area here, you see how we have price rally here on this candle, and then we open, we rally up through that candle's high, and we open up and run through that one here. So there's a lot of overlapping in this price delivery until we get right there. So at the high of that fair value gap, we have an inefficiency. It's a fair value gap. So if you look at it from this perspective, the high and low of those candles, that's your fair value gap. And I'll make this one yellow. And we'll extend it right, and you'll see right away what I'm drawing your attention to. We drop down into that low and consequent encroachment, midpoint of this gap. Also, if we show regular trading hours, it'll look slightly different.
Ooh, that was a
So we had that same gap, yes. We have this low
transition.
and this low. So resting below here was what? Sell side. But because of the day being Monday, and because we have a high impact news driver calendar that's loaded with a lot of different events that could create a lot of the volatility, I'm expecting us to have a range bound day today. So it may not get down here and take that sell side. They may save it. So I want to use the easiest one, which would be trading to consequent encroachment of the new week opening gap, which is this level here. And it would also trade just to that low here. So that candle's low comes in at 93 even. Consequent encroachment came in at 93.75. So I want to be just one tick below 93.75, which would be 4193.50. Because it may not sweep that low. It may not sweep that low, but it will likely get into the high end of that gap, which comes in at the low of that candle right here at 4192.50. So in terms of spread, that would be 4192.75. That's where my limit order would have to be perfect, to be absolutely perfect. So to remove all that guesswork in here and adding more confidence to what I was trying to do, I finessed the exit just one tick below what I felt that it was likely to reach for. And then I gave up the, was it 1.5 handles of difference between the actual low, and we'll look at it in a second. So that's the regular trading hours. We'll go back in electronic trading hours. And I know right away you're thinking, man, this is a lot of stuff, ICT. Well, I mean, this is the way it is, right? I mean, you want precision. I mean, it's going to cost you some effort. And it's going to cost you some understanding. And it's why you cannot learn this with 5-minute trainers on YouTube. I'm sorry. It takes some time. So we have all this business here with the previous gap in here. We went back through that one more time. And now we're going to go into a 1-minute chart. Shrink this up a little bit. And all those things being equal, we also have some institutional market structure here. So we have the market showing unwillingness to go up inside here, and when it ran away from that, that's a key level. My bias was already bearish. I wanted to see it take out the sell side here. Where's it going to gravitate to? New week opening gaps. What's the current new week opening gap? It's the high of this one. The midpoint and the low is here. So it's likely to draw down into midpoint. Okay, look at the bodies of the candles. Are they going to consequent correction? Yes. What is the closing price on this candle right there? 4193.75. Perfect. Perfect. That's exactly the consequent correction level for the current new week opening gap. That's algorithmic. But the market will offer lower prices beyond that, and that's where the damage is done. So notice this price level here. standard deviation -4. Why am I using that? When I was pulling out the fib on this early, before I did the trade, I ran through the series of having all of the standard deviations that were offered to me on the downside from that swing right here. So this is like a trigger. When this low is taken out, you're probably hearing my son up there, he's flipping out on his PC games. I'm not editing it out to deal with it. So we have the high to the low, and we have a standard deviation of -1, -2, -3, -4. Where's the overlap? We have -3.5 rate at consequent encroachment, one tick below that. I like that. And then the next one is 41.90 even, which takes us below half of that consequent encroachment of that yellow shaded area, which is the 15-minute fair value gap, which is also at the top of that blue shaded daily fair value gap, which is discount. Okay, so now watch this low of 41.90. What's the candle's low right here?
41.90.
Look right up here. 41.90.00. Perfect. But there's no algorithm, right? You're listening to them. So we have that. I'll take that off. And I'll add the executions now so we can see. There they are right there. You can see all the data. I'll toggle them on and off. You can see it's what it is. I shouldn't have to do that with you all here, but it is what it is, right? And the 93.50 level, you can see it down here. That price is the last 4. So it went 4 at the high of current week opening gap high, and then 75% of the range from low to high. That's where I had the 2 contracts come off, and then the final came off at consequent encroachment. And I gave up the precision elements that was required down here because I don't want to draw any attention because there's a lot of people studying my stuff, and I don't want them to see what I'm doing down here. But I just explained it to you, okay? And since then, we've obviously seen the market pull back up off of that, came into the original fair value gap that I mentioned. Now, this is the high of current week opening gap high, and then 75% of the range from low to high. That's where I had the 2 contracts come off, and then the final came off at consequent encroachment. And I gave up the precision elements that was required down here because I don't want to draw any attention because there's a lot of people studying my stuff, and I don't want them to see what I'm doing down here. But I just explained it to you, okay? And since then, we've obviously seen the market pull back up off of that, came into the original fair value gap that I mentioned. Now, this is a 1-minute candlestick, and it's right there at the 957, and then 958, and then 959. On this candle here, there was, let me take the executions off so we can clean the chart up. Right there on that candle, that's 1001. So now at 1001, where's our fair value gap? Right there. But another one formed, and you watch me do that live in the recording, and then the limit order filled. The high on this candle came in at 42.06.50, and one more time, I just want to add the execution so you can appreciate the level of precision that was implemented this morning. The high was 42.06.5, and my fill was at 42.06.25, which allows for only the spread to fill me. So that's that. So I hope you find this one insightful, and enjoy your day. I'll talk to you tomorrow. Be safe.
Giving up some precision elements. Let's see if they got any better.
Plans that and some CPI for GBP, and then we have 10 a.m. one this high, and we did see that. We've had an attempt to trade down into it.
All right, Loki. Let's backtest. I don't really need to mess around today. I think backtesting is honestly better than just consuming YouTube content. You're able to see it actually happen, you know. And then I want to go down today's action, go over today's action. I don't know when we'll do that. And then I also want to do a market review. And then I want to do a few case studies while we're here. And I don't know if we'll watch another lecture, but who knows with me. I do like to watch lectures. But as we can see here, we have that 5-minute imbalance here that price drew up into. This is a classic Judas. We don't even take sell stops first. We just come up into this imbalance and then we retrace. So this would be a classic Judas. Forms a a classic Judas forms. Into a 5-minute fair value gap. Price forms a BPR, and then sell side objectives along with new week opening gap are sought by the algo. As expected, it's like we almost draw into another new week opening gap there. Oh, we almost had a previous new week opening gap there too. Is this a new day opening gap? It is. I want to look at NQ here. Monday, May 22nd. We'll backtest this contract for the end of May at least. May 22nd. I'm saying like really backtest. I'm going to journal. Monday, May 22nd. Is that the same date? Monday the 22nd. Okay, so we have big divergence here. All right, yeah, I think it's 60 days and 20 days. I'm pretty sure. I'm pretty sure that's what I should stick with. Oh, we almost come into CE of that. NQ comes all the way back up to a premium. We're back to fair value. To this hourly order block range. This would be the actual hourly order block that we reprice right to at 10 a.m. All right. Kind of consolidation on NQ. But ES had a nice little trade right there. And then we drop down here. Create a volume imbalance. We use the volume balance. We inverse this here. And then we seek. We don't take buy side ever. Overall, pretty kind of a aggressive repricing lower to new week opening gap. Balance price range here, maybe something there to this imbalance here, and then off to this imbalance, then up to liquidity here. 1050 macro, we have displacement, fair value gap. Alright, these new day opening gaps are going to be significant. I think we want this new week opening gap. We've taken buy side. Have we taken buy side on ES? On the 15? Is it the Thursday highs? Yeah, it is. So we're taking buy side on both, but Monday highs. Have we taken Monday highs? So you have SMT here. Looking for this imbalance here. We are a new week opening gap though. Consequent encroachment at 9:30. So these highs wouldn't be a bad objective. Let's see if we want these highs. The week opening gap high. Propulsion. That fails. We're likely drawing to this low. We break through the new week opening gap. We drew into the imbalance. Oh. Wait, oh shoot! I went too far. Dang, bro. It's why I like FX free play. Order block, new week opening gap high there. Then we draw up to 8:30 opening price consolidation from 9:50 macro, so 10:50 macro, where we expect to see something. And exactly, a 10:50 macro starts a buy program up to these highs here. And 11:50 macro starts a sell program to here. And 12:50 macro starts a repricing higher. And then 150 macro doesn't really do much. Yeah, I'm just gonna do FX replay and just do FX replay and just stick to it, honestly, bro. I will do this one. I kind of want to actually place entries too. $11 a.m. here. Okay, we just reprice this balanced price range into this. We're kind of just within two. I'm just expecting whipsaw through here. There's not anything that's clear and higher probability. We'll see if the market wants to show us a hand, but we do have low resistance liquidity here. We could be in a buy program. I mean, we've had sell side. We have equal lows. We can swing grade this. Okay, we've broken above 50%. So now we have the context that we're likely gonna flee to buy side. We do have a volume imbalance here. Is it easier to read on the lower time frame? Yeah, right here. Let's see it on the 1 minute. It's kind of hard. I think it's best on the 2 minute right here. We kind of just accumulate off that. Look how I got respected here and then here. So I want to see these highs and then possibly these highs. Screw it. We'll it'll be this type of backtesting, yeah. We're at that 75%. I'd be interested in putting my stop here. It's just consolidation. Oh, I didn't see that we took buy side here. So we have taken buy side there. If we have SMT there, that would make sense. Yeah, with SMT, so yeah, I think we're attacking this low, actually. Pull back, imbalance right there. Wow, I went too fast. We came up, we take buy side. This is at 10:30. Where's market open? So 950 macro, we reverse. Yeah, low-key, that's the best for these lines. I've never changed that. $9.50 reverse, change state delivery here on the 1 minute. We're looking at 5 minute change state delivery. Right here. Oh yeah, this 2 minute order block is nice. In line with that breaker. 1 minute. We have a tiny fair value gap, looks like. -2 gets met. Possible retracement reversal. Then at buy side, we end up having a market structure shift here. Inversion in line with a fair value gap. This will be a sensitive fair value gap. We don't need to trade up to these up close candles because we have an inversion, market structure shift. And imbalance right there we trade into. Looks like we're repricing to this low here. We definitely have a new day opening gap. It looks like. We're drawing into a fair value gap right now. Let's see where we're gonna open. We open this place higher. If we inverse this, I'd be looking for it for a sell side. Yeah. Ah. Bro, I I need to stop backtesting, bro. We have to have a new day opening gap here. I just feel it. I think I see it over here. You can literally see it in here, but I want to see it on trading view because I think it'd be a little more accurate. Look at where we reverse from here. At 9:35. Come to the low of that. Causes expansion there. Yeah. So we put in the low here. So now I'm expecting buy side probably. Like I don't. I think new day open gaps are the like I have to. You have to have this information, or else you'd be like, why did we not take sell side? Like we left all these failure swings. You have a failure swing over there, because this algorithm prioritizes that new day open gap. Okay, we're at the low end of that. So I keep on switching back and forth, but let's get ALD. All right, so here we have market open right here. We come down, we liquidate sell side. We finish a market maker sell model. We come back up to rebalance to new day opening gap and into this imbalance right here. Yeah, it's because Monday no red folder news. Come back down, come up. Like I think these levels are necessary to have on the chart, honestly. I use an indicator. This is the indicator I use, and these are the settings I use. The reasoning for using the 60 previous days is because IPTA is going to refer to the last 60 days when it collects this data. So it's the same thing if you know what the 20, 40, 60 date IPTA data ranges are. It's the same thing with this. And then the new week opening gaps for the 20, that's what I've found has worked. Notice here, We've come down, we took sell side, then we rebalanced to this inefficiency here in price, this balanced price range, and into this. Notice how this high is constant approach to that new week opening gap or new day opening gap. New day opening gap's the silver or gray, whatever, tan. And then we get a fair value gap into that signature again. And overall, what is... We have a larger sell side liquidity pool that rests here. With this imbalance here, market's going to look to reprice to that. $2019, yeah. It doesn't matter what year it is. Alright, bro. I'll be right back. My stomach bugging. Imagine I was gone for like 40 minutes. No, we back. Woo! Okay, as we see, price draws up into the new day opening gap. Not new week opening gap. We've already liquidated sell side, so in terms of looking for standard deviation, what are we gonna look for? 0.5 has a nice standard deviation though that lines up. -1, -1.5, -2, -2.5. What's the midpoint of this two? This might be. The low on that candle is 740. We get fair value gap in, fair value gap out. Balance price range, inversion. That's a nice inversion model right there. Is it in a macro? Slightly out of one. Get displacement up. Where do we put in a high right there? Where else? New day opening gap right there. And we expand off a new day opening gap. I'm guessing earnings, maybe to some random levels. Notice where we close. That seems pretty random to me, honestly. I think we want this new day opening gap. Yep. What do we open? 9:30. We have this big imbalance here. Here yesterday we left a low right below that and we repriced higher and we repriced lower aggressively. Look at the bodies here. Look at the wick right there, delivering straight to a new day opening gap right there. At 10 a.m. we get a stop hunt. Get a big wick here. Not really any type of entry there. Come back, boom, boom. Look at that. And then we reprice to these highs right here, completing this market maker model. I do want to go over today's action that we had. So I'm low-key going to head out soon. Basically, we had a pretty consolidative P price action. So whenever we can expect to see consolidations, we're probably just going to be ranging from premium to discount back to premium. I already had this dealing range measured out, but I'll measure it out again just for good's sake. All right, so here Let me mark out this dealing range again. This is what we do here. We have a discount here, extreme discount. We never actually come into the extreme discount, but then we have extreme premium. I did that wrong. Here we go. Extreme premium to extreme discount. Come up to an imbalance here. And we come back down to discount. We reclaim this fair value gap. Normally, when I was reading this live, I want to see displacement here, but we want to come back down to then come to this imbalance here. And we repriced higher. Take buy side here. Look at the 15-minute chart. There was literally nothing in the 950 macro. Did absolutely nothing. 950 macro consolidated. So 1050 macro is gonna do something. Consolidation 950 macro. 1050 macro reprices right to new day opening gap there. I honestly should have stayed on the charts for the 1050 macro. And then we have this imbalance here within price. Then we expand. We don't come back to here. We create a 5-minute imbalance. We don't trade into that. We now create a mitigation. We have a mitigation block right here. Price reaccumulates at here. And then we seek buy side right here. And then we accumulate, consolidate. Do we have SMT here? We definitely have SMT at the lows somewhere. And we reprice the buy side. Alright, Loki, I'm going to head out of here. And then I'm going to make a market review slideshow that I'm going to present. And I'm going to create some more. I'm going to create some more case studies I'm going to record later today. Anyways, I appreciate y'all. I'll see y'all in the next one. I thought it was going to be live longer, but this is good enough. I'll be live tomorrow morning, though. And I guess we'll see what time to